Joining us now to discuss is Ben McMillan, Chief Investment Officer at IDX Digital Assets, a quantitative asset manager. Hi there, Ben. So, did you buy the dip?
We didn't. We actually, again, our focus as a firm is one of managing risk, and especially, your points earlier about kind of the continued adoption we've seen of Bitcoin with, El Salvador, India coming online. Wharton today announced that they're going to start accepting tuition in Bitcoin. This is all part of a very long-term bullish case for Bitcoin. But interestingly, what we've seen is now the clients that we talk to are now more concerned about the risks with the asset class. The conversation is no longer about whether or not it should be in the portfolio. Most people are past that. It's all right. We know it has a place in the portfolio, but now how do we manage it? Because the volatility is very real, and so our models are designed to mitigate short-term volatility. And so we actually ended up taking a little exposure off the table earlier this week, right at about around $62,000.
Right. So maybe you can go into how do you manage the risk? I mean, it's good times right now, but if you're in a crypto winter that lasts, 1 or 2 years, it's not so great on the bank account.
No, that's absolutely it. I mean, and that's, it's funny too, because, a lot of the early clients we had, the early conversations were early adopters. And so for them, it was just about buy and hold for 10 years, lock it away in a ledger. Crypto winter isn't an issue. But, as we start seeing more institutional investors, and as most of our clients are fiduciaries, these are groups like pensions, endowments, they're managing other people's money. So they're marking to market every month. They simply just can't tolerate a 90% drawdown, a 3-year drawdown. That just makes Bitcoin as a buy and hold proposition just simply untenable. And so the conversation very starts to pivot to how do we manage this? And so to answer your question, we're a quantitative firm. We're looking at the big data all day long, every day long. We have models running. And so we're looking for things like conviction around a move. What's the on-chain data saying? What's the sentiment saying? And simply stated, we think about the world and we look to separate the world into kind of 3 different areas. Green light, yellow light, red light. So risk on, you want full exposure. Red light, you want maximum cash. And then yellow light, which is where we are now, which is where you're cautiously optimistic. And so again, that's why earlier this week, we started to pare back exposure. We're still long, we still have a bullish outlook, but we're taking more of a wait and see approach to see where does Bitcoin go from here? Is it going to be like a few weeks ago where it hit all-time highs? Or is it going to be like April, May, where we saw a 50% drawdown?
What makes you cautiously optimistic and in that yellow zone, as you say?
So it's a good question. It's a combination of the secular bull case is still absolutely intact. One thing you've talked a lot about, which candidly I don't think has gotten a lot of press, is the success of the Lightning upgrade. We have Taproot coming online. We're starting to see a real critical mass of adoption of Bitcoin. Not just as a store of value or even as an inflation hedge, candidly, but real use cases. MasterCard, El Salvador, Wharton. People are starting to really transact in Bitcoin. And so, all of that obviously presents a very strong secular bull case for Bitcoin. But of course, at the end of the day, it's buyers and sellers, and it's a sentiment-driven market. And so, really, it's the shorter-term indicators that are determining when we take risk off in periods
like this. Well, Ben, since you're in that yellow zone, what are some of the more, the risks to watch out for that could potentially lead us into more bearish territory that and would make you more cautious?
Yeah, so for us to move into similar to what we saw in April, like a full cash position, it would just be selling pressure. So this year has really been the story about China. Fortunately, a lot of the risk with China has subsided, but any kind of large scale liquidations, we're seeing leverage tick up a little bit, which I think is contributing to some of the short term pullback. But excessive leverage in the system and short term liquidations are typically a catalyst for downside volatility. And I would say that's the big near-term one that we're kind of keeping an eye on.
All right. So end of year outlook, Ben? Any price targets?
End of year outlook is still strong. But again, we had a client tell me this is, Bitcoin started the year at 29,000. We hit all-time highs, which looks great if you ignore, the 25% drawdown in Q1, the 50% drawdown over the summer, and then another, 30% drawdown or 36% drawdown just a few months ago. So the outlook is volatility is here to stay. We would not be surprised to see all-time highs again, but we certainly would not be surprised to see another big drawdown. So the volatility is the one constant in this asset class.